this morning, we have received the latest numbers on inflation. Consumer prices rose 0.4% in April, right in line with analyst estimates. And for more, I am joined now by Steve Blitz, senior economist at ITG Capital Markets. Steve has been analyzing the economy for more than 30 years. Hey, Steve. More than 30 years.
Well, I remember when inflation really was inflation.
Yeah, is it any easier now than it used to be a while ago? I mean, now you have so many global forces.
Well, I think that's exactly right. That is the major difference between then and now, in that if you go back to the 70s, inflation was really a homegrown event that got exacerbated by a lot of union contracts with cost of living adjustments and increases. You don't have that now. You don't have union to the same extent, and for the most part, what we're seeing is higher prices, not inflation, and that's a very big difference. And those higher prices are being imported, in effect, into a country that is growing well below potential and where there's still a tremendous amount of excess capacity in the economy.
Well, let's talk about that. You know, the core number came in line with analyst estimates. No big surprises in the number. But what do you mean when you say higher prices don't translate into inflation necessarily?
Well, inflation is about a general level in prices over an extended period of time, where wages are going up, prices are going up. Price increases, which what we have now, and the transitory things that the Chairman Bernanke was talking about, this is part of a well-functioning part of an economy. Prices go up, prices go down, it shifts demand, it shifts allocations. The dangerous part right now is that you are beginning to see in core inflation things such as shelter, even apparel was up a little bit this month, and so the core inflation is actually beginning to pick up, as it should cyclically. You know,
let me ask you this, though. You talked about wages when you talk about prices going up, wages going up, because I do understand that as an economist, you're looking at very technical things. But when we look at just the consumer, let's just use common sense here. I was looking at the report this morning and I saw real hourly pay fell 0.3%.
Right.
Fifth decrease in 5 months. So if you have prices of things going up that consumers buy, yet you actually have their wages going down, or the impact of those prices going up is creating the effect of their wages going down, that can't be good for the economy long term.
No, it's not. And in fact, if you look at the retail sales numbers we got yesterday and you parse through and you get to the retail sales of discretionary items, the stuff that I like to call you want to own as opposed to have, there's a very small increase. And a lot of those categories, such as in furniture and electronics, actually fell month to month. So you are beginning to see the beginning of a shift from discretionary items towards food and energy and things that people have to own. And you're right, it is. And that's those that are more bearish about the economy going forward are looking at that relationship and saying, you know, we're not getting this kind of dynamic lift. And that's the difference between a homegrown inflation and an inflation where, in effect, its prices being imported, they become a tax on margins and a tax on consumption.
So, Steve, we've got about 30 seconds here. Ben Bernanke, QE2, is set to expire in June. Are his hands tied in terms of what else he can do at this point? I
think he is politically tied. I'm not sure that if he lived in a different environment right now that he wouldn't want to roll over QE2 into something a little bit smaller for another 6 months, rather than having the economy go cold turkey in effect, and suddenly there's 70, 80 billion a month that's being that has to suddenly goes from being financed by the Fed to being financed by the private sector. So I think he'd like to do that, but politically there's a lot more concern about inflation. I think it's a little bit misdirected.
Right, maybe it's more of a Secretary Geithner conversation, U.S.-China trade relations, talking about currencies when you talk about homegrown versus
well, that's
imported.
a big part of it, and that's, you know, part of what they're trying to do is get the real good sector economy growing, which it is, but it's not growing fast enough, and it usually doesn't grow that fast because it doesn't grow with the same kind of leverage as real estate and finance. All
right, Steve, unfortunately we got to leave it there. Enjoy having you on the show. Thanks for coming in. That was senior economist at ITG Investment Research, Steve Blitz.